Hi, everyone. This is Jason Bjerk of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. We're recording this interview on Wednesday, May 14th, 2025. I want to get back on a returning guest. He covers the uranium and nuclear power industry better than anyone out there. Justin Huhn from Uranium Insider. There's a lot of crazy stuff going on right now with the big technology companies, not just the US ones. You have the Chinese ones with artificial intelligence software, data center investments, and capex. Also, there's these executive orders going on right now about Trump. So I want to get his thoughts on that. Justin, thank you for joining me again.
Good to be with you again, Jason. Thanks so much for having me on.
Now, last week, for our listeners out there, maybe they didn't see it. Trump was, or at least the New York Times was reporting that Trump was about to issue an executive order on nuclear power. What was it about trying to fast track the permitting process and the construction process for nuclear power plants in the US?
Yeah, there was sort of a leak out of the White House that there was an intention of the Trump admin to issue multiple executive orders with the intention of accelerating the deployment of new nuclear in the United States, with the ultimate goal of achieving a quadrupling of nuclear capacity domestically by 2050. So to give you some idea, there's 94, 95 gigawatts of capacity currently in the United States. So that would be an absolutely enormous undertaking. And a lot of mixed signals out of Washington, but that obviously was an incredibly bullish, for lack of a better word, headline. We still don't know officially what the U.S. The Trump admin's stance and policies are going to be for the supporting of rapid deployment of nuclear energy. Like I said, kind of mixed signals as of right now. The administration still seems largely focused on cutting rather than deploying new capital. The investment tax credits from Biden admin's Inflation Reduction Act are on the chopping block for nuclear. There's a lot of nuclear advocacy organizations and utilities pushing for those to remain. We'll see what comes out of that, but still kind of waiting with bated breath to see what we're going to be hearing from the Trump admin as far as these executive orders go.
Okay, so by mixed signals, let me just try to summarize this for our listeners, what Justin's talked about. So on the one hand, the executive order rumors are that Trump wants to rapidly accelerate a timeline, construction timeline, permitting timeline for nuclear power plants here in the US. So that would be make nuclear power construction and permitting way more efficient. It would reduce maybe the permitting fees. But what Justin said basically now is that because of the budget deficit constraints, the U.S. federal government financing issues in the bond market with the 10-year U.S. Treasury yield back at 4.5% right now, the yields, the interest rates on the bonds are not coming back down, which is what President Trump and his Treasury Secretary Scott Bessent have said they wanted. They want to refinance the debt. So then that doesn't let them set up with these financing programs for the nuclear power plants. You expect then if the interest rates did come down, that nuclear power plants would get a lot more funding then?
Yeah, I'm sure it wouldn't hurt. That's definitely part of the problem. I mean, there's obviously tech company interest in investing in nuclear. There's big bank interest globally in investing in nuclear. The United States, in particular, obviously, there's a lot of kind of gun shyness, for lack of a better word, on behalf of utilities and banks for that matter as well, due to the cost and time frame overruns, scheduling overruns from Vogtle 3 and 4. Importantly, the cost reduction and schedule overrun reduction was incredibly significant between Unit 3 and 4. And a lot of the nuclear advocates in the United States are really pushing for building more large AP1000s. However, the focus of the administration so far seems to be on quote unquote advanced nuclear and small modular reactors. So, prior to becoming Secretary of Energy, Chris Wright was on the board of Oklo, which is one of the SMR developing companies. There's dozens and dozens of companies worldwide that are working on different designs for small modular reactors. And the perception is that if these things are smaller, they're going to be cheaper. Of course, during the major building phase of nuclear in the United States and in other countries, it was the exact opposite. Started small, and with building larger ended up being cheaper per gigawatt. So the reactors that were constructed, just the economies of scale, continue to get larger and larger and larger. And just because of this one cost overrun project in the US, it seems to be going in the opposite direction. There are plenty of use cases for small reactors, and so I'm bullish across the board on the very different types of the varying types of nuclear designs. But SMRs can be implemented at remote locations like military bases. They can be implemented into smaller municipalities that don't have a very large grid. But as far as the United States goes, with this war, this AI kind of race with China to achieve artificial general intelligence first and not let China beat us to that goal. We don't need small. We need big and we need fast and we need to do it quickly. So it's obvious that solar plus storage and gas is going to have to fill that gap in the meantime, but how the US is going to achieve anything remotely close to a quadrupling of nuclear capacity has yet to be seen, and it's going to need to have government support in order to do it that fast and that large.
Well, I mean, big tech they're spending tens of billions of dollars. I have the projected capital expenditure budget for the largest five or six technology companies in the US. So that's just Amazon, Google, Meta, and Microsoft. I mean, I had it at $300 billion just for this year for 2025. That was what they were giving out for guidance from November through January. Now, I think there was a slight cut in, I think Microsoft, they canceled a few data center leases, but what the average person or the Wall Street analyst who was saying that the capex budgets would be drastically cut, we've seen Meta pick up those leases. We've seen Google announce new deals to try to secure nuclear power. Along with buying up land, the land grab here in Northern Virginia. I just saw another headline on data center dynamics. I think Google just bought another 100 acre, or Amazon I think just bought another 100 acres out in Loudoun County. So the land grab for nine-figure spending, it's not a few million here, few million there. We're over $100 million for these land package purchases and the data center build out. Do you think that these tech companies, is their priority to find nuclear power, or do you think that they're open to like across the board, or they're okay with natural gas?
So, if I could assess the situation presently in terms of tech companies and their relationship with nuclear, what I would say is that they want nuclear, yet they understand that they can't have new nuclear capacity tomorrow. And we're talking about the United States. What can be restarted is in process of being restarted. So Constellation's restarting 3 Mile Island. That should be online in 2028. The Palisades reactor in Michigan is going to be restarted later this year. There's one other plant in Iowa, a smaller plant that could be restarted. It's not official yet. So there's an understanding that long term, when we're looking at the 2030s, 40s, 50s, 60s, and beyond, to have a base load clean energy source that can operate for 80 to 100 years is incredibly attractive, especially for any tech companies that's thinking in terms of decades. But getting over the line for electricity needs to be met in the next 2, 3, 4, 5 years. That is going to come from another source. It just has to by nature. But if we're going to play in competition with China and we're thinking in terms of decades, nuclear is the best option. And we've seen plenty of evidence of tech company involvement with nuclear on smaller scales, right? So there's deals. I would say the Constellation deal with Microsoft for restarting 3 Mile Island is probably the largest one and the most obvious one, but just recently we had Google announce a partnership with Elemental Power. That's to fund, early development of 3 new nuclear sites, each of those generating 600 megawatts. So those are not necessarily all that small. And Elemental's goal is 10 gigawatts by 2035. That's actually reasonable time frame. I would say, Jason, the most quote unquote bullish news around nuclear more recently has been, in terms of tech company involvement, is Santee Cooper, just the owner of the VC Summer plant in South Carolina. They successfully built Unit 1. I believe that was early 2000s or late 90s, if I recall correctly. They were building Units 2 and 3 and starting with Unit 2 during the process when Westinghouse went bankrupt while they were building Vogtle 3 and 4 as well. Now you have a partially constructed VC Summer Unit 2 in South Carolina, and Santee Cooper put out an RFP basically saying, who's interested in ownership and or participation in restarting the construction of this reactor? They received 60 responses to that RFP. Amongst those were the big tech companies. So there's real interest from big tech in actually funding new nuclear. What's happening right now is this spinning mess of various players figuring out how they're going to work together to get that over the line. So that's tech companies, that's the nuclear utilities, that's the actual builders and developers of the various different designs of nuclear, and it is maybe or maybe not the US federal government. So, what happens out of the Trump admin is kind of that first step, at least clarity. Are you going to be adding any sort of subsidies or tax credits or anything to accelerate this process, or are you not? Let us know so that we can figure out how we're going to move forward. So it is kind of hanging over the industry. In the meantime, all of these parties are talking to each other. I still expect that this year we're going to hear announcements of new construction or resumed construction in the case of VC Summer of large AP1000 nuclear reactors in the United States. I still think that reading the tea leaves, things are moving in that direction. We just need more clarity on the financial side of things, especially from the federal government.
And I think China said they're building what 10 new nuclear power plants this year alone in 2025 and 2026. So it's 10 per year. Is that the number? But you have the tech companies. A lot of the Wall Street analysts they were saying the tech companies, the big five or six ones, they're going to cut back on capital expenditure. They're not going to spend on data centers. They're not going to spend on artificial intelligence, upgrading the software or any of those types of things. In fact, you could argue the exact opposite has happened. Now, some of the companies have kept their capital expenditure budget projections flat. They haven't increased or decreased them from a couple months ago. But Meta just announced, and this is a surprise one because Meta's taking all those profits from Instagram and they're investing across the board. They just increased it up to, I think, $70 billion or a little above 70 billion. They're going to commit to data centers and building this out with their open source artificial intelligence software and data centers. So the data center construction is not stopping, Justin. And I'm just thinking, they need a bridge fuel. So I guess then Chevron is going to build out these natural gas pipelines and turbines in Texas and Oklahoma. Elon Musk at what the Colossus data center for XAI, that's a natural gas pipeline in Tennessee. But these the natural gas, what is a temporary solution then? So you build out a natural gas pipeline for a couple of years, but long term you still want nuclear power because you don't know what the natural gas prices could be way higher a few years from now.
Yeah, it's absolutely true. The natural gas power, it fluctuates in cost based on the price of natural gas. I have a feeling it's going to be kind of a yes and. So, natural gas may or may not be an interim solution. It might be what is needed right now to get things going, along with probably solar and storage, just to get things off the ground. But, who knows the capacity and the demand for electricity in the United States based on this data center demand and just the general growth in electrifying everything going forward into the next decade and beyond. It might be so great that we need everything that's about to be built with natural gas in the next 2, 3, 4 years and an expansion of nuclear. It might not be one or the other or one and then the other. We really could see an all of the above if this pans out in the way that it's looking like it could.
I agree. It has to be all of the above. I don't know. I've been sending you some of these research reports over the last like 6 months for the cooling systems. I mean, they're talking about liquid cooling systems. This is like an order of magnitude more power. The old data center construction, there was a ton of engineers that said that the data centers could never have more than 30,000 GPU units per data center. So for many, many years, a lot of the experts said that a data center will never have more than 30,000 GPU units there. And then Elon Musk and his team there at XAI, they go and build the Colossus data center that has 100,000 GPU units, and then talking about scaling it up in just the last month or so to 200,000. Now, 6 years from now, they're saying it'll go to 1 million GPU units, that the design engineering is there for them to scale to from 100,000 to 200,000 and then up to 1 million GPU units. That's an astronomical amount more power that's going to be required.
The size of these things is shocking, and the amount of money that's being spent and the electricity consumption is just it's truly jaw dropping. And I think that the investing community has sort of been sleeping on this story. We had the big headlines in Q3 of last year with the Constellation and Microsoft deal, with Meta and a couple of other companies, Amazon, all stating intentions of working with nuclear developers. But this story has continued to grow quietly in the background as billions and billions and billions of dollars are being allocated to build out these data centers. Yeah, I think we're going to have major headlines later on this year along that same line with regards to building out new nuclear. We just need clarity on a couple of fronts.
Now, for uranium enrichment, it sounds like we're going to need a lot more nuclear fuel rods, uranium enrichment. I'm not sure if we'll see a peace deal with the US, Ukraine, and Russia that Trump is negotiating. So the US would start to get maybe some Russian uranium enrichment back. Should the US be investing then into uranium enrichment then, besides just the new nuclear power plants? Because it sounds like we're going to need new facilities here expanded to supply these data centers and the new nuclear power plants.
The enrichment challenges, at least for the United States, are sort of they're kind of hypothetical at this point. Primarily, that's HALEU, and that's high assay low enriched uranium that it's utilized in a number of these advanced reactor designs and these small modular reactor designs. So TerraPower's Natrium, for example, that's actually under construction as we speak, that's in the state of Wyoming. They just received an NRC exemption to allow them to begin construction on the energy island without having that NRC approval of the design. So that's a very, very good sign for the NRC and for other projects as well. But that operates on HALEU, and there is no HALEU, essentially very, very little HALEU production outside of Russia. So Centrus is working on that right now in very small volumes. It's possible we could do a little bit of downblending for that first core load for some of these advanced reactors. But that's the biggest challenge globally, and we do have a global marketplace across the fuel chain. Globally, there's enough enrichment to go around at the moment. But if we are talking about vastly expanding nuclear capacity in the United States, you know, a la the Trump admin's let's quadruple by 2050. And I kind of chuckle because I'm not seeing anything yet that leads me to believe that that's even remotely possible. But if we are going to expand nuclear even a third of that goal, we're going to need more of everything across the fuel cycle, more uranium mining, more conversion, more enrichment, more fuel fabrication. So all of that is going to have to grow based on the global capacity for nuclear right now and the rate of growth, which is about, 3 or 4% compound annual currently globally. The fuel cycle is reacting and growing along with nuclear. So no real concerns there for the rate of growth currently. But if we are to achieve anything remotely close to these stated goals, everything across the fuel chain is going to have to expand.
Yeah, I agree. And it starts with the data center build out because the data centers are paid for, they're under construction. A lot of the capital expenditure that was spent in 2023 and 2024, they prepaid for the data center. They're just starting to break ground on some of these data centers. So the average person says, oh, they spent all that capital expenditure budget. The data center boom is over. They haven't actually even started construction on some of the data centers that were paid for over the last year and a half. Those things are backed up in the queue and already paid for. That's how much far behind like the data center companies are in building this out for stuff that's already paid for.
Yeah, yeah, amazing. It's the capital allocation is truly huge. So we're going to see this whole theme, in my opinion, just absolutely snowball. And everybody's so impatient sometimes, especially on the investing side of things. And granted, the time frame for investment in nuclear, in uranium, has been incredibly stretched, especially for anybody like myself who's approached this investment for, starting back in 2017. It's really stretched out. I can't believe how much runway we still have ahead of us. But this story, data center growth, energy consumption, and the role that nuclear will play in that entire world is in its infancy. And this is really going to snowball. It's probably going to end up looking like a hockey stick. So these things are barely getting off the ground. And I think AI is here to stay. I honestly think, and I don't know if you agree with me or not, but I think this is more profound potentially than the advent of the internet itself. I think that AI is going to become integrated into so many different aspects, technological aspects of daily life, that it will be like the internet is now. It's we cannot live without the internet in modern society, something that didn't exist 30 years ago. If we were to lose that tomorrow, it would be absolute chaos, death, and destruction globally. I'm not hoping that this happens, of course, but I think AI is going to be instrumental and absolutely necessary for the functioning of a modern technological society. Maybe it already is, but in the next 2, 3, 4, 5 years and beyond, it's going to grow so huge that we need to power it, and all stops will be pulled in order to make that happen. That's how it's looking to me. I have no crystal ball, but the signs are there that it's moving that direction for sure.
Well, I'll tell you that the Chinese government definitely thinks so because learning how to use artificial intelligence software is actually a mandatory requirement now in Chinese elementary schools. So they've started, instead of teaching kids like computer science programming, they're teaching them how to adapt to all the artificial intelligence software, how to use that in your different businesses or for search. So the old internet search that's dying now, we've seen that with the data. And for a lot of businesses and industries, I mean, they're going to have productivity boosts. The humans are going to be able to get huge productivity boosts by using the artificial intelligence software for research.
For sure. And I think that it's going to have so many use cases that are far beyond just like a better Google search. It's really going to change things in a major way. And it's going to require a shocking expansion of the electricity grid and electrical capacity. And I think nuclear is going to play a big role of that in the future.
Now, there's a technology arms race between the US and China with the data centers, artificial intelligence software, humanoid robots, drones. Is China also in an arms race with the US to secure cheap uranium supply and stuff like that in other countries? Are they going around to the low cost uranium miners and are they trying to fund these to lock up a long term supply contract too?
China has kind of an all of the above strategy. So officially, their strategy is to to realize their uranium needs by one third domestic mining, one third international procurement. So that's contracting with producers internationally, and one third of producing internationally. So ownership of mines like the Rossing mine, like the Husab mine in Namibia, like the joint ventures in Kazakhstan. In reality, their needs will never be met with one third of domestic production. They have very little domestic production. It's 5-6 million pounds a year and possibly even less. They are expanding with a project in Inner Mongolia, an ISR project, kind of first of its kind. That's looking constructive with the little information we can actually get out of China, but how much they'll be able to produce is anyone's guess. But what they have been doing has been an expansion of joint ventures in Kazakhstan and huge contracts with Kazatomprom. None this year so far, but the last 2 years, they have been by far the biggest volume in long-term contracts has been coming from the Chinese utilities. Even though they have a lot of production through joint ventures in Kazakhstan, they have a solid amount of production coming out of Namibia. They are still going kind of all of the above, an expansion of domestic mining, an expansion of international projects, an expansion of long-term contracting. And they've kind of been a first mover. And when you look at and it's really quite shocking, Jason, because they also have the most inventory. So China has, about 600 million pounds of commercial inventory as of the reporting last year. So that was at the end of 2023 that was reported on in 2024. We don't have those reports yet this year for 2024. So 600 million pounds, but of course that's total commercial inventories. That includes military stockpiles, strategic sovereign inventories for the country of China. These are not mobile inventories that are held by traders. These are owned by the utilities, the state-owned utilities in China and the federal government in China. So they have the most inventories by a large margin, but they're also the biggest buyers of uranium. And then you look in the West and you look at the US utilities, which are the least covered. Maybe the South Koreans are pretty uncovered as well. Certain Japanese utilities are pretty uncovered. The European utilities generally have a little bit more. The Chinese are thinking in decades and they know, they've got a goal of 200 gigawatts by 2035. Right now, they have about 56, 57 gigawatts, if I recall correctly. They're probably not going to hit 200, but even if you model for 150 gigawatts, it's such a big expansion. That's an enormous amount of uranium. That's 70 million pounds a year that they're going to be burning through by 2035. So China is out there. They're kicking rocks on projects. They're buying up uranium kind of hand over fist. Meanwhile, the West is incredibly complacent on the side of the utilities. They don't want to pay up, and of course there's differences between state-owned corporations of a communist government and deregulated utilities in the United States that are operating in a quote unquote free market. They're very different motivations, very different budgets, so it's hard to compare those two. But in general, the West is far less covered, and in our estimation, Jason, we see a situation in the next few years where we're going to see utilities forced to the table to long-term contract with the producers in the West, because most of the production coming out of Kazakhstan, the biggest player in the world, is going to Russia and China. And that trend is not reversing. It's increasing. And we go out 5, maybe 10 years from now, I don't think there's going to be any uranium coming out of that country heading to the West besides what has been contracted in the past. So we've got a dire supply situation, especially in the West. And to answer your question, yes, China is acting. They're building reactors like crazy. Like you said, close to 10 reactors a year. They haven't quite hit 10 grid connections per year. It's been closer to 7 or 8 over the past few years, but they have had 10 reactor approvals. Just a couple weeks ago, they approved 10 construction starts. So they are likely to hit that 150 gigawatts by 2035, and they're out there buying up uranium. And absolutely every utility that has any uncovered needs, especially in the near-ish term, let's say 3, 4, 5 years out, which is near term for the nuclear industry, they need to get their act together. They need to sign long-term contracts with producers, and they need to pay what those producers are asking for those contract terms. That has to happen if we have even a remote hope of approaching a quote unquote balanced market starting in the early 2030s, and it's not looking good so far.
And isn't Kazatomprom, correct me if I'm wrong, aren't they having some operational and production issues because they're not hitting their production goals? Their production's lower, substantially lower than what they were targeting. And isn't also their costs, production costs, profit margins, they're having pressures with those too, with input costs rising and profit margin problems too?
The profit margins are still pretty good in Kazakhstan for Kazatomprom. What we've seen for the joint venture partners is that the country of Kazakhstan has introduced significantly higher extraction taxes. So, and I don't have the numbers right in front of me, Jason, but for a company like Cameco, they have a joint venture in Kazakhstan called the Inkai, JV Inkai. This has been an enormous consistent project in the country. And what Cameco is telling us is that their production costs in Kazakhstan are on par with their production costs in Saskatchewan. So you have these high grade deposits in Saskatchewan, no doubt, Cigar Lake, McArthur River, very high grade. These are underground, very, very complicated mines with freeze walls to keep the aquifer from seeping into the mine, hundreds and hundreds of employees. It's complicated, complex, more expensive mining, yet that's on par with Inkai because of these VATs that were introduced. So,
And that used to not be the case. To interrupt you there, so I think like what Cigar Lake was closed for years because of flooding, right? So Cigar Lake and McArthur River are two of the best uranium mining assets in the whole world, but on a relative basis, they're also substantially higher cost, right, than Kazatomprom in the past. Kazatomprom, what had the in situ mining, it was a lot cheaper with the chemicals that you talked about in the past. The cost used to be way lower than Cameco's two best mines.
yeah, because Kazakhstan, the ISR mining in Kazakhstan historically has been amongst the lowest cost uranium mines in the world. Those costs are increasing for various reasons. Just to correct you a little bit with Cigar Lake McArthur, Cigar Lake had a flood during its development. It hasn't flooded since, and that was back in 2006 or 7, if I recall correctly. McArthur River was taken offline in 2018. The story from the company is that it was due to pricing mechanisms. It was cheaper for them to shut down that mine to put it on care and maintenance, $10 million a month to keep it in care and maintenance, and go into the spot market and buy uranium in order to fulfill their contract obligations. So McArthur River was offline from 2018 to 2022. So that's these mines, historically speaking, have been on the lower side of the cost curve, which is why they continue to operate during the 2010s when the price bottomed, $18 a pound in 2016. But Kazakhstan, historically speaking, has the lowest and still has the lowest production costs. But these new and increased taxes are affecting the joint venture partners. As far as Kazatomprom themselves, because they're a state-owned company, it's kind of left pocket, right pocket as far as the increased taxation doesn't affect them as much. But for the Chinese, for the French, for the Japanese, for the Canadians that have joint ventures in the country, much more expensive to produce there today than it was even last year.
Now, for companies like Cameco, are they talking about expanding production and growth, or do you think that they're being more conservative here? They're kind of looking at the global economy. They're going to wait for these data centers to be built first, maybe before they increase production. What do you think their goals are for the next couple of years?
The messaging coming from Cameco specifically is that they're not seeing sufficient utility activity in terms of signing long-term contracts with the company at the prices that they require. So what they and utilities expect when a public company puts out a feasibility study, for example, or they can see the financials for an existing producer with Cameco, they can see what their costs are for production, and they honestly expect that they are going to sign deals at their cost of production. And the company, without realizing that these are publicly traded companies, they have a duty to return positive cash flow to shareholders. And so Cameco is saying, yeah, we want mid 70s or 80s floors, $120 ceilings. We want these contracts to be referenced to the market. And they're not signing any contracts. Utilities are not stepping up to the plate with Cameco. Now, we had a spate of contracting in 2023. There was a little bit in 2022. 2024 had a decent number, but that was a lot of Chinese purchasing, again, from Kazakhstan, Kazatomprom specifically. So Cameco is telling the market, we can expand MacArthur River to its nameplate capacity of 24 million pounds a year. It's currently at 18 million pounds a year, expected for 2025. We can, but we're not pulling that trigger yet because the price signals in the utility contracting is not there. So we're seeing supply discipline from Western producers like Cameco. We're seeing development projects like Bannerman's Etango, like Deep Yellow's Tumas, where they're basically saying, we're not going to make a final investment decision yet because the pricing environment isn't there. So we have a handful of existing producers that are fulfilling legacy contracts, maybe keeping a bit of capacity open for contracting, late decade. But there's a lot of development projects that are just not going to happen at these prices.
Oh yeah, I agree. And I think what'll happen over the next couple years, maybe 5 to 7 years tops, is the data centers will be built. They will initially have natural gas pipelines. So Chevron will be one of the main beneficiaries, the natural gas pipeline companies that are building the new pipelines, like the Stargate AI one in Texas and Oklahoma area, to the data center. So they will initially, but then the natural gas price will go up. These new cooling systems will be installed. The scaling that they want to take the data centers to 100,000 GPUs, 200,000, even more. They will start to see that they don't have control over the rising costs of the natural gas and electricity usage, and then they will say, "What we need nuclear." That's what the data center operators, the tech companies are going to say. Wait, wait, wait! Our cooling costs, our power costs, our electricity costs, way higher than we projected. We need to lock in something more stable long term. We need nuclear power. I think that's what's going to happen.
It's entirely possible. In the meantime, the tech companies are expressing interest in nuclear. So it's just slow to get off the ground. And like I said, I think these things are going to snowball, especially the reactor designs that have a lot of momentum and a lot of interest. So that would be, TerraPower's Natrium, GE Hitachi's BWRX 300. Dow Chemical has signed agreements with X Energy to build their XE100, which is a high temperature gas reactor or gas cooled reactor. So there's some advanced reactor designs. There's some light water, boiling water reactor designs that are advanced and that are smaller and modular, and potentially with economies of scale, we could see these things be built at prices that work for the tech companies. So the interest is there, but yeah, it's entirely possible that the fluctuating cost due to increased natural gas prices is something that negatively affects these companies in the future. And nuclear looks even better. And in the meantime, these projects are in their infancy, and some of them are being developed, some are in the early stages of construction. Just takes time, and once you have that first of a kind, what second of a kind, you understand the cost structure and the timeframes for construction. You can grasp your mind around that, and you can put your budgets to work.
And we're just at the proof of concept stage. So like Oklo and
Yeah.
these other ones, but they're just getting pilot plants approved. So it's wonderful long term for innovation, new nuclear power, next generation stuff. But we're not really at the scaling part. We're just basically at the pilot plant and proof of concept stuff. Because some of the news stories coming out are just wild, Justin. I mean, they're talking right here in the Northern Virginia area about a commercial scale nuclear fusion plant here in Northern Virginia for all the massive data centers in the next 6 or 7 years. I just don't know. I mean, there's tons of people saying it's not even possible, but I just hear people saying they're gonna do it. They're gonna start building the plant out in the next couple of years.
Yeah, that's probably not going to happen. I mean, one of the most interesting fusion stories that I saw recently was China is building a prototype fission fusion kind of hybrid plant where the energy needs of the fusion side of the plant will be provided by fission. That's really interesting design. I mean, I have great hopes for fission in the future, but it's not a near-term solution.
Yeah, and they started what China's testing these artificial suns out too with nuclear fusion. So I've been kind of keeping tabs on some of these article stories. Now I don't understand all the technical aspects, but I know there's a lot of private investors, billionaires that are spending a lot of money on these projects. So there's a lot of really big money that's invested in nuclear power innovation lately.
Yeah, absolutely.
Uh, for China building out these new nuclear power plants, could you maybe talk about the timeline differential? Now, obviously, China's not a free market. I would actually argue that the U.S. for building out new nuclear power plants, yes, we have publicly traded electrical utilities and some uranium miners. It's not a free market either because of all the rules, regulations, red tape, the permitting approvals, delays. You have to go through so many hoops just to build one nuclear power plant. What's the timeline differential between the U.S. and China for building out a nuclear power plant?
Well, it's hard to even compare that because we've built so little in the last, 20, 25 years. The Vogel plant, I believe it was pushing almost 30 billion to build units 3 and 4. I think it took 12 years, 13, 14, it was more than that even possibly. I don't have that off the top of my head, but it took twice as long and cost twice as much, essentially, as the initial figures. And there were a lot of problems with how Southern Company and Westinghouse went about that project. With all of that said, that reactor, that nuclear power station, the Vogtle power station in Georgia, is the crown jewel of the state. And the fact that they have this enormous amount of clean energy in the state because of Vogtle, they're attracting so much industry. So even though it went way over budget and took way longer, it still was totally worth doing. So all of that said, I'm not going to be apologist for the problems of that project, and there were many, and this has been audited, for lack of a better word, by multiple entities, including Biden's DOE and their liftoff report that went into what went wrong at Vogtle and how can we avoid those mistakes in the future and get new nuclear built now in the states. So, with that was a very good. The liftoff reports really went into that deeply. Comparing that to China, China is basically in fleet mode at this point with a couple of designs. One of them being the Hualong one, and this is they're building these in less than 6 years. And some of them, there's even been a couple that have been built right around the 5 year time frame. So almost the fastest these things have ever been built. I think the record for a large reactor, I believe, was Japan built a gigawatt scale boiling water reactor in like 4.5 years in the early 2000s. So China is right there, 5 to 6 years building a gigawatt scale reactor.
And nine or 10 of them a year, right? So that's the plan. China wants to build about nine or 10 new nuclear power plants per year. And so they're efficient at building these things, and then they want to build almost 10 of them per year now going forward.
Yep. In order for them to reach that 150 gigawatts by 2035, I believe it's about 8 reactors a year, and they're on pace to hit that.
And the nuclear power plants you talked about that were double the amount of time and capital required in Georgia. The I don't know if you saw like the data center companies, the tech companies, they're scrambling to buy up the land and build the data centers all around the new nuclear power plant. It's a huge land grab over there.
Absolutely. Yeah, it's a huge boon for the state of Georgia, despite the fact that it was a major headache and a huge disaster. Just the construction and the time frames and the cost for that plant. It's just an absolute boon to the state of Georgia and for Southern Company as well.
Yeah, I think the nuclear power plant problems with construction on time and on budget, the delays, is just a microcosm of the entire U.S. infrastructure, where like everything that we want to get funded, it just takes too long. It costs too much money. There's delays. It's not built right. It's like that with all the infrastructure in the U.S. for decades now.
Yeah, it's true. I mean, the regulations are part of it, but that's not the whole story. I mean, just comparing with China for one example is, union labor involved. You got thousands and thousands and thousands of union workers who are earning a very, very high wages, justifiably so. It's very expensive to build a nuclear reactor in the United States for that reason alone. China doesn't really deal with that as much. So, there's various reasons. The regulation aspect of it, I think that the critique of the NRC as a regulator in the United States is largely kind of going along with the general narrative in the Trump admin wanting to slash regulations in this and slash regulations in that. But the NRC, even though there have been some anti-nuclear representatives within the NRC over the past decades that certainly have slowed things down. That isn't the number one impediment to building new nuclear in the United States right now. So, I mean, the biggest impediment right now is just uncertainty around what the Trump admin is going to do, if anything, to support the growth of nuclear. Because prior to Trump winning the election, what the Biden admin had established, even though the Inflation Reduction Act achieved the opposite of its namesake. There were a lot of positive elements within that spending bill, that investment tax credits and clean energy production tax credits that were very, very supportive of the nuclear utilities, not only for their existing fleet and investing in uprates at their reactors, but also for making plans of building new nuclear. So what are they going to do is the biggest overhang. The NRC is not really in the way at this point with existing designs. So there's dozens of current locations where there are existing power plants, nuclear power plants in the United States that are already permitted to build additional reactors at those sites. And the utilities are basically on board. Many of them want to build new nuclear. So the NRC is in no way, shape, or form in the way of building new reactors at these sites. What the biggest critique of the NRC is how long it takes for them to approve new designs. But we already have the AP1000 and dozens of other designs approved that have been built in the country. So that they're not really stopping things. So that critique, I think, is getting a little bit too much attention and is not really where we should be pointing the finger. What we need is clarity from the Trump admin. Are you going to be giving any sort of tax credits or subsidies or backstopping for investing in building new nuclear, or are you not? Let us know so we can make our decision. That's the biggest thing that's overhanging right now. It isn't the NRC.
And I think that will change over the next couple of years, if it not sooner, especially as these new data centers are built because they're already paid for. They're going to be built out, and then they're going to run into the problems that Justin and I were discussing earlier about they want to scale up the GPUs, the size of the data center. They want to install these new amazing liquid cooling systems that require an enormous amount more energy and electricity to cool down the data center so it doesn't overheat, and then all the new parts and stuff like that. So they're going to decide that after the data center is built, that they can't run it just on natural gas, especially with the fluctuation in natural gas prices. If the U.S. especially is going to export an enormous amount of liquefied natural gas, because there's a lot of those facilities coming on too. So you have the LNG exports and the data centers that are going to be competing for natural gas supply that might not be increasing over the next couple of years. So that opens up a huge opportunity, I think, Justin, for more nuclear power after those data centers are built, that they're going to decide that they don't want to compete with liquefied natural gas exports for natural gas. They want a more reliable electricity locked in long term with nuclear power.
Yeah, I completely agree with you. I mean, it really is a match made in heaven. Nuclear is incredibly energy dense. It is carbon free and emissions free in the production of electricity. They can operate for 80 to 100 years and potentially beyond. And they're always on stable baseload power. I mean, it checks all of the boxes that a tech company would want to power a data center. The biggest downside is the time it takes to build them. And so that's I completely agree with you. I think that's a highly likely scenario to play out in the next 5 to 10 years. And in the meantime, let's get these first of a kind built. Let's get some clarity from the administration. And let's make some deals. And I think we'll hear not only clarity from the administration likely in the coming weeks, but in the coming months, we're going to hear about plans, whether it's the VC Summer resuming construction, a deal with Santee Cooper and a tech company. That's highly likely, or new AP1000s, hitting the ground. We also know that multiple utilities in the U.S. are interested in small modular reactors. There's been expressed interest in GE Hitachi's BWRX-300 at existing sites where there's currently a large gigawatt scale reactor. All of these things are going to come together. It just takes time. And the best part about all of this, Jason, is that the growth of nuclear in the United States is absolutely unnecessary for the uranium investing thesis. There's nothing that's going to come online in the United States over the time frame that we see for this investment. So this is all upside. We expect every single operating reactor in the United States to receive life extensions, and almost all of them have applied for life extensions. The only one we don't model to be extended is Diablo Canyon in California, even though it's highly likely to be extended beyond 29 and 30. So The existing fleet is incredibly de-risked by the growth of electricity demand in the United States. And as far as new nuclear goes, for me personally, that's more of just being a nuclear advocate and wanting to see this expand, not only for the growth of data centers and this current competition we find ourselves in with China, which is, positively acknowledged by the Trump administration and multiple people within the admin saying this is very, very important. The growth of AI here is important. We cannot lose this race to China. We're going to do what needs to be done. I think that bodes well for nuclear. But importantly, nuclear growth in the US, we're going to see high uranium prices, whether or not we ever built another nuclear reactor in the United States, because the demand that you can model for uranium based on the existing fleet and what's currently under construction, that's all that matters for the time frame for this investment, in my opinion. With all of that said, we could have an incredibly long runway for this investment thesis for the growth of nuclear and the rising price of uranium, which is going to be absolutely necessary to incentivize those marginal projects to be able to mine enough of the stuff to fuel this nuclear renaissance. So it's all coming together. Elements of this story do take time to pan out, but there's nothing here that is poking a significant hole in this thesis whatsoever. I think we're going to see much higher prices this year.
I don't know about this year, but long term, I 100% agree. I mean, I see potentially an order of magnitude increase in electricity demand growth. So these data centers, we're not seeing the capital expenditure cuts that a lot of people on Wall Street and the anti-artificial intelligence software, anti-data center, anti-nuclear people were predicting. We're not seeing the capex cuts. The data center build out is still occurring. The big tech companies are still spending capital expenditure. So are the Chinese technology company. So it's Cold War. I view it as Cold War 2.0. It's not a hot kinetic war. It's a technology arms race, Justin, with 5 or 6 key technologies. And then they're trying to line up all the electricity, all the energy, all the materials, all the infrastructure needed for the technology arms race. And I think nuclear power, because it offers what the most stable long-term electricity, it's going to play a huge part in potentially that order of magnitude increase in the electricity demand growth.
Yeah, absolutely well said. I couldn't agree more.
Now, for the SMR companies like Oklo, I get asked questions like this a lot. These companies are very, very speculative, right? So the shares can go up and down a lot. These companies are not profitable, right? So they're just right now, they're testing the technology, they're doing research and development, and they're just building out proof of concept and pilot plants. They're not profitable yet.
Oklo had its earnings call yesterday after market, and they are expecting positive cash flow as soon as next year. NewScale also had their earnings in the last couple of days. They're expecting something similar. There's not a lot of clarity on actual deals that they have made that are going to be providing that cash flow. Oklo is saying that they expect this pilot project in Idaho to be operational by 2027 or early 2028. That isn't going to happen. So the timelines are very, very optimistic. We do know that NewScale has a deal in Romania. They don't have any announced deals in the United States yet. Will that happen? Not really sure. It is the only approved design in the NRC, but they have a smaller design that's approved, and there doesn't seem to be any interest in that smaller design. So these stocks have generally traded on sentiment, short squeeze, Wall Street bets type kind of trading, extremely, extremely volatile. But all of that said, it's looking positive for the small modular reactor world. I think this is a enormous theme for the future. We're going to see more and more SMR companies become publicly traded. And what we believe is there's going to be a small handful of winners that are going to take the majority of the market share. And that's kind of being whittled down as we speak. Again, we're not even at the top of the first inning with this theme. But the Great British Nuclear is doing an SMR competition. They've whittled it down to, I think, 3 final entrants into this competition. They kicked NewScale out. I think Westinghouse voluntarily dropped out of that. But either way, big interest in GE Hitachi's BWRX 300. TerraPower's Natrium, because they've got the backing of Bill Gates and potentially Microsoft. And it's a very interesting design. And they're breaking ground. They're literally building it right now in Wyoming to replace a coal plant. But this design has the ability to fluctuate up and down in its electricity production, do it relatively easily compared to traditional nuclear because it stores energy in molten salt. So it can cycle up and down, which makes it a better a better design to be utilized in a grid that's shared with renewables that are inconsistently producing energy. So that's going to be a big winner. I think Rolls-Royce looks good. There's a number of reactor companies out there that seem to be getting more interest from global utilities and more market share. We're just going to have to see how it pans out, but it's a huge theme. We're going to see more and more companies go public as the years go on.
And we've seen the TED Talks what with the molten salt thorium reactor, Kirk Sorensen, the thorium remix on YouTube. People can watch that. So there's been, along with TerraPower, there's been these companies presenting and talking about this for 10 or 15 years. I've been keeping tabs on this, but it finally seems that we've gotten to this tipping point, Justin, where finally they're starting to get serious amount of funding. I remember talking with Kirk Sorensen years ago, and he was potentially looking at getting deals set up for funding for Flibe Energy, the liquid salt molten salt thorium reactor company, and he couldn't get any funding years ago. That he thought he was going to get deals, months of work, and then couldn't get funding. Now it appears these companies are finally getting like public attention, funding. People want to invest in the nuclear power, and you see the headlines with China with artificial suns. For nuclear fusion, and it seems like almost every month or two they're making progress. Now, I'm not talking about that we're going to have commercial scale fusion reactors in the next 5 years or anything, but they are making progress in the labs on this too. So it's a really exciting time for nuclear power innovation.
Yeah, absolutely. The company that I was thinking of, it's a molten salt reactor company, a small modular reactor company, is going public, is called Terrestrial. They should be going public via a D-SPAC later this year. And yeah, the molten salt thing, thorium energy, it's very exciting. I get this question a lot, Jason. The Chinese built a small modular reactor, molten salt, thorium powered reactor in China that is operational. And they've discovered, huge thorium deposits. So I get this question a lot. Is the thorium energy revolution going to kill the uranium thesis? And the short answer is no. Technically speaking, the global reactors can operate on thorium with a little bit of plutonium, yet none of them are. So there's reasons for that. Most of the time, reactor operators don't really like to mess around with fuel. They figure out what works and they kind of stick with that for safety reasons. And there's also not really a thorium fuel chain established. Is there hope for thorium powered reactors in the future? 100%. Something I would love to see. Thorium is abundant. Thorium fuel is inherently meltdown proof. There's a lot of advantage to thorium. But for whatever reason, the CANDU reactors, light water, boiling water, but especially the CANDUs, 10% of the world's grid, they could be operating on thorium with a little bit of plutonium, and none of them are. So as of right now, and in my estimation, going out for the future, the existing reactors and those under construction, light water, boiling water, they are going to be operating on uranium fuel. They are, and they will be. A lot of runway ahead for the uranium market. But yes, thorium, molten salt reactors, very exciting designs. Hopefully we see much, much more of that in the future as well.
And those existing nuclear power plants using the fuel rods, those can eventually be turned and recycled like old nuclear weapons into fuel for liquid fluoride molten salt thorium reactors, because thorium doesn't do fission on its own. So it has to be used with, like you said, uranium or plutonium. So those old fuel rods, you can recycle those things. So hopefully, I'm cautiously optimistic that in the future, we will get to that point. I think the money is finally starting to go into these companies, that the tech people are seeing after years of what the TED Talks with Kirk Sorensen for thorium and the recycling. Nuclear power is finally getting the investment dollars for research and development. We're just not at the profitable commercialization stage for all these new technologies that you talked about throughout the interview. We're only at what the pilot plant stage, proof of concept. So they're building out little plants and testing them out right now.
Yep, absolutely.
But it's a very exciting time. So for conservative investors out there, Justin, you think then, so the main names like the electrical utility companies, Constellation Energy, and then Cameco, Kazatomprom, those are the safer ones?
I don't know if I would say Kazatomprom is necessarily safe, only because you can see how it's traded. It's traded at a huge discount to its Western counterparts, especially Cameco. There's a lot of concern around how things are operating in the country currently in terms of the company. They have a former exec that's in prison on corruption charges, basically, seemingly because he had signed deals at lower prices and then the price environment rose. So the theory is, somebody's pockets were lined. I don't believe that's the case, but either way, he is behind bars. And I think that you see a huge amount of C-suite turnover at the company. There's really interesting things like A couple weeks back during the Cameco conference call, one of the reps from Cameco was discussing the sulfuric acid situation in Kazakhstan and basically said that, to their knowledge, there hadn't been a contract signed for the construction of the sulfuric acid plant that Kazatomprom continues to say is going to be operational next year, and they haven't even put a shovel on the ground yet.
Oh wow.
And then lo and behold, 2 weeks later, Kazatomprom comes out with a news release that says this plant's going to be operational in 2027 and the funding is secured. So, you really don't know exactly what's happening there. It's kind of a black box. So I wouldn't
I've
necessarily.
always viewed Cameco safer. Like I know, like I have friends
Yes,
that are uranium hedge fund managers, like Harris Copperman, Cuppy, and Rickwell, and they love Kazatomprom and they have Kazatomprom. But I always viewed Cameco safer because it was Canada, and I didn't think they were playing the games that you just said with corruption or shady accounting, or you don't know what the story is on the ground there. And I think Kazakhstan even had geopolitical instability 4 or 5 years ago.
they did. Yeah, that was back in 2022, actually, and Putin kind of had to come to the rescue to quell that uprising. But yeah, no, it's difficult because Kazatomprom is the obvious value play in the sector, bar none. They're an enormous cash producer. They're the biggest producer in the world. They will continue to grow their production. We don't believe they're going to come close to what their nameplate capacity, their 100% of subsoil use agreements is going to be, which is, north of 80 million pounds a year. I think they peak probably in the mid 70s if they can reach that. But Cameco is, and Cameco now is not just a uranium company. They mine uranium, they convert uranium, they've got fuel fabrication through Westinghouse and 49% ownership of Westinghouse. That, I think, 10 years from now, you're going to look back and see that acquisition as absolutely brilliant. I don't think the market has any clue what the Westinghouse ownership has for the future NAV for the company. So I think that's a huge one. I think it's a safe play. Sput is probably the safest, just buying, the representation of physical uranium. I think it's a great risk reward here. I think the spot bottom is in. It's upside from here. How quickly it moves up from here is hard to say, but it looks like positions are being taken. It looks like, we're going to see a continuation move in the price of uranium. Maybe it stalls out a little bit if the summer gets slow, but that's probably an easy and safe play. And generally speaking, the utility stocks have done extremely well. Part of the reason is that they're far, far more liquid than anything in the uranium space. So if you want to play that side of the story, that's a way to do it. The Nukes ETF that holds a number of SMR companies, holds Cameco, holds a number of the utility companies might be a good way, a safe way to do it, just to diversify if you don't want to put in the work to pick individual stocks.
Were you talking about the Sprott Physical Uranium Trust or another one?
Yes.
Okay, so that's the main that's the most liquid pure uranium play, right? Because they don't produce any uranium, they just hold uranium in a vault in a trust.
They hold physical uranium. They have, I believe, 63, 64 million pounds of uranium held across the different conversion facilities. I think right now they're trading at a 7 or 8% discount to NAV. And really interestingly, just a couple of days ago, they announced they had done a financing and they did it at NAV. So they had traded down to about a 5% discount and they raised 25 million bucks. So there were institutional players that were willing to buy units off market in a placement at NAV. So essentially paying a 5% premium. And that's really interesting because Sput was getting down to the bottom of the barrels with their cash reserves, and the market understood they were going to have to sell, 50,000 pounds or 100,000 pounds, whatever. It's kind of a drop in the bucket, but just the narrative of them having to sell pounds to raise cash is not something that Sput shareholders or anyone in this investment really wants to see, even though it's kind of a meaningless amount of uranium. But there's institutional interest in buying at a premium when they were at 5-6% discount to NAV to give them cash and solve that cash problem. I think there's more interest there. We'll see. But yes, buying and holding the physical uranium is via Sput is probably one of the better risk reward propositions in the space. It's not the most liquid. UEC, Cameco, those are more liquid, but it is pretty liquid.
Do they plan on financing if they think the spot uranium price is cheap and will go up, or do you think they just did it like you said, just for mostly cash purposes for running the trust?
Yeah, there's no real speculation on price for Sput. They traditionally how they've operated is when it trades at a premium to its net asset value, they will issue units into the open market via their ATM and raise cash that way. But they haven't traded at a premium. A couple of days earlier this year, or maybe it was even back in November the last time. So it's almost, and this is sort of the fate of a closed-end fund is in the trade at a persistent discount to NAV, and that's kind of what's happened. So they basically raised because A, they needed the cash, and B, there was institutional interest to do it at a premium. So it's in my opinion, it's a very, very good sign. How much more interest is out there if they can get, closer to NAV? Who knows? Who knows? They could actually potentially raise money in this fashion going forward. So we'll have to see.
What an excellent discussion from one of the top uranium and nuclear power experts, Justin Huhn, today. If my listeners want to follow your work, how do they do so?
Yeah, you can find us at uraniuminsider.com, and I'm also on Twitter, or X as it's known now, at Uranium Insider.
And I think we're just in the early stages of this uranium bull market. We've had a little bit of a correction lately, but long term, I think we're still in the very, very early stages. And the key, I think, Justin, is to watch the capital expenditure for these large tech companies in the US, China, European Union. I mean, I'm seeing that the European Union is behind on the data centers. They're trying to play catch up now. They're talking about spending a couple $100 billion in cash because they see what the US and China are doing and they want to start playing catch up here. They want to start building that out. So I think potentially you could see more nuclear power announcements coming out of the European Union area and besides just the United Kingdom because they realize how far behind they are in the data centers.
Entirely possible, Jason. And I think you just to wrap it up on that front, it wouldn't be out of the realm of possibility and would be an extreme right tail event for any tech company to get physically involved with the fuel cycle. And I can tell you right now, multiple tech companies have been kicking the tires in the fuel cycle over the past months. So we know, if you can imagine a tech company making a multi-billion dollar investment to power their data center for the rest of the century, making sure that they can fuel it. And what would that look like? So that's a right tail event of epic proportions if that were to pan out, and it would not be out of the realm of possibility, and it wouldn't be out of precedent either for someone other than an end user, which would be a utility, actually procuring uranium. So we've seen oil and gas companies get involved in uranium back in the 70s. We've seen utilities actually take stakes in uranium projects. That has happened before, not in this cycle. So much potential for this to go in an extreme upside situation in the next few years.